Let's talk about copper, because you take a look at the price of copper, we're around $83,000 or so. We know that we've seen plenty of supply shocks in this market, and it feels like the price has barely budged. Does this come down to a demand story?
Goldman Sachs has just published today calling for over $9,000 a ton copper this year. We think copper is making a bottom. I'd be willing to wager on $9,500 a ton before we go down to $7,500 a ton. The physical market is very, very tight and now in deficit. And with the Fed likely to cut rates, the dollar-denominated price of copper is likely to go up a lot this year by the middle of the year.
Well, let's talk about China, because I don't need to tell you that a lot of the bearish cases for copper, they really come back to sluggish Chinese demand. How does that factor into your pretty bullish view here?
It's not true. China consumed more copper last year than any year before. So Chinese demand is still very strong. Everybody knows about the weak real estate market in China, which is probably 20 to 25% of their economy. But military demand, national security demand, demand for militarization is very high. And so physical offtake is very strong, and inventories are extremely low. So really, this is like a powder keg ready to explode as soon as the Fed cuts rates in the second half.
So a red herring on the Chinese demand.
Forget about the Chinese demand. India is growing, Europe is growing, the rest of the world is growing, and the demand for ESG and the greening of the world economy remains very strong.
All right, I'm going to forget about it for at least a couple of minutes. Let's talk about $15,000, because you joined BTV last month. You made waves by saying that we need a copper price of $15,000 a ton to really stimulate and sustain new investment in copper mines. Of course, copper is at almost half of that price today. What does the road to $15,000 look like? What do we need to happen?
We've seen molybdenum go from $1 a pound to $30 a pound. We see metals go crazy when you need them. If somebody is pointing a gun at you, you need that copper to shoot back. You don't do an NPV model. So we see massive military demand. Europe is rearming. Japan is rearming. Taiwan wants to turn into a big porcupine. The United States military is worried about a shortage of 155 millimeter howitzer shells. What do you think the world's army is made out of as all this shooting goes on? And meantime, we have a huge amount of humanity that wants to green the world economy, building electric cars, windmills. So everything you touch requires copper metal in the modern economy, including this wonderful studio where we're sitting, smiling at each other.
Well, Robert, I have to say, I hope I never need copper that badly, but let's assume that we stay around these levels, $83,000 or so. What would that mean for the legacy mines that are in business right now?
The legacy mines are in the process of slowly dying. They're very low grade. They're generating more and more global warming gas per unit of production. It's really, really difficult to bring a copper mine into production. It usually takes 20 years or so for a tier 1 mine to be discovered, built, and constructed. And we've had such a long period of time when all the money in the world went into your previous guests, like Netflix or broadband or wireless or really sexy, disruptive technology, and we didn't put money into mining, into basic raw materials. And so this is the revenge of the old economy. And suddenly we have a shortage of these metals. And so it's inevitable that the price will rise. It's only a question of when.